All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today's August 28th, 2025. And the top story this morning is the market digesting Nvidia's earnings. Now, all the headlines, of course, are saying Nvidia earnings beat top and bottom line. Oh, Nvidia's numbers are amazing. Don't forget your pom-poms. But what none of these headlines are addressing is the elephant in the room. Those data center revenue numbers disappointed yesterday. So let's talk a little bit about what happened at Nvidia. And again, guys, this one company represents a ridiculously disproportionate share of the S&P 500, and thus it is probably the single biggest holding in the 401k of every American, whether they know it or not. There is a lot riding on this one company. First, the good. Revenue numbers, top line, growth of 56% year over year. Let's acknowledge that for what it is. That's pretty amazing. All right. This is a $4.5 trillion company growing revenues at 56% year over year. That's impressive by any standard. All right. Also, they announced a $60 billion buyback. That's a lot of buybacks. That's going to support the share price. Investors are going to like that. Coincidentally, that's also exit liquidity for the senior leadership at that company, which has been doing nothing but selling stock for freaking years. What does it say about the confidence in a share price when a company is using shareholder capital to buy back stock and then the executives are selling into that? It's worth pointing out. All right. Anyways, that's the good there. But the big one, the one that everybody should be talking about, and some people are talking about it, is the data center revenue number, because data centers, right? That's your AI build out. That's where all the big GPUs, the H100s, the B100s, B200s, where they all live. $41.1 billion. That's versus expectations of 41.3. In other words, that is a miss. And look, guys, that's a miss. Understand, that's a big deal because everybody expected Nvidia to beat expectations. The irony of that is if everybody's expecting the expectations to be beaten, well, then doesn't that mean the expectations are shit to begin with? But I digress. Not only was everybody who had just priced in that Nvidia was going to blow away the data center revenues, the only question was by how much? Will it be a huge beat or will it be a small beat? It was neither. It was a miss on that data center revenue. Not only that, the data center numbers, that sequential growth, every quarter, the growth in the data center segment is getting smaller and smaller and smaller, and they're actually forecasting no data center growth for this current quarter, which means growth is now zero. Remember, Nvidia is a growth story, and data center is the growth engine. This is not good here. Now, it ain't a bubble burster. This is not enough to make everybody panic and go dump everything. It's not, your Cisco or your Sun Microsystems, that red candle of death. But this is not enough to further inflate this bubble, not by a long shot. Also, there's some other important things going on in these earnings reports. They're claiming zero China sales. There were no H20 sales in the quarter because of the trade war and the embargo. That whole discussion about, the China total addressable market is $50 billion a quarter and the government is standing in the way, that is a total red herring BS narrative. Case in point, Nvidia's Singapore sales, $10.1 billion, up again. Singapore is not buying GPUs. That is the Chinese. We all know this is happening. This is a ridiculously massive black market that Nvidia is aware of and is doing absolutely nothing to stop. They are arming our enemies with technology that will be used for military applications that will highly likely target our own sailors and Marines in the coming years, and the world is doing nothing about it. Shout out to my friends at Gamers Nexus who did an amazing 3.5-hour documentary about how pervasive this black market is. And freaking Bloomberg, the bastion of journalistic integrity that they are, filed a copyright strike and got the video taken down. Hey, Bloomberg, it's your job to do journalism, not Gamers Nexus. And when they're doing it for you, maybe you should do a little bit of reflecting on your own failure to conduct due diligence instead of lawyering up to suppress that messaging. But what do I know? Just circle the wagons around Nvidia, kind of like you did with the whole rando thing 2 years ago. Also, customer concentration is a big risk. The top 2 customers holding an increasingly large percentage of Nvidia's revenue. Anywhere else in the world, the market would punish a company for that kind of customer concentration, but this is not anywhere else in the world. This is the AI mania, and number must go up. Now, look, initially, Nvidia torpedoed by about 5% when in the blink of an eye on this data center miss. People were initially focusing on that. And then Jensen gets on the conference call and says, oh, we believe that the total addressable market will be trillions upon trillions and spend. And we expect by the end of this decade, let's think of a random number, $6 trillion in data center CapEx is going to be spent. And of course, the market just takes out their pom-poms. They cheer that on. They applaud for it. And people start buying the stock. Nvidia stock is holding up really well here on what should be viewed as a disappointing quarter, especially when you consider how much optimism was baked in. Again, this was a good earnings report, that 56% growth. That is a good number, but the market was priced for perfection. This definitely was not perfection. Other stories going on this morning. We got GDP grew by a larger percentage, 3.3% in the second quarter versus the initial estimate of 3.1%. Why is the economy doing better here? Well, you got to remember that GDP math, the 2 categories, business investment, that grew by more than previously expected. That business investment, that is your data center construction and your data center build out. And we also had a big jump in net exports. Now, it's still negative, but a jump in net exports, guys, that's the trade war. It is having the desired effect on the trade deficit in the United States. Now, we still don't know long-term if this is going to be a win, right? We know there's pain coming down the pipe from higher prices due to these tariffs. We don't know how much. We don't know who's going to pay for it. We can all theorize and speculate, but at this point, we don't know until it actually happens. But one thing is for sure, the trade deficit in the United States is shrinking. By the way, think about what that means long-term for the US dollar and for asset prices. The biggest source of dollars around the world is the United States trade deficit. We buy more than we sell, which means we export a ton of dollars, mostly printed dollars. Well, if we're closing that gap, if our net exports are getting smaller, that means the amount of dollars entering the global trade market will be shrinking, which means everybody needs dollars to buy food, to buy oil, to buy all the stuff that they need. Could this actually lead to a spike in the DXY? It's interesting. Keep an eye on that. We also got an interesting story coming out of Japan, more trade war related stuff here. The Japanese top trade negotiator has canceled his trip to the United States over disagreements on specifics of the trade deal, not trade deal that was struck a few weeks ago. The Japanese want us to lower our auto tariffs from the 25% to the 15% that was agreed to in the deal. And the U.S. is saying, not so fast. We want details of that $500 billion in investments you guys promised to make in the United States. And Japan is like, oh, $500 billion. Yeah, about that. You know what I think is going on here? Here's what I think. A lot of that $500 billion investment in the United States was SoftBank and their silly projections about Project Stargate. And whoops, SoftBank doesn't have the money. And it's not even close. And now the Japanese are like, oh, crap, how are we going to get our auto tariffs lowered to get Nissan out of the dirt, out of the basement? And, oh, crap, SoftBank doesn't have the money. What are we going to do? Well, you might want to call off that trip and get the negotiators back to the table. Turns out that deal wasn't really so much of a deal to begin with. We also have a story coming out of India. Now, this is interesting. Yesterday, the narrative with India was that the pressure in the trade war and the pressure of the tariffs was resulting in fewer purchases of Russian oil. Well, today we've got Reuters saying the exact opposite. Reuters is saying India's Russian oil imports are set to rise in September. So which one is it? Are the Indian, this is like Schrodinger's Russian oil imports of India. They are both rising and falling at the same time. And we have a big meeting is set to take place in China, by the way. Modi, Xi Jinping, and President Putin are all getting in the same room. Yikes. You know, India was always like the question mark in this big geopolitical struggle going on between East and West right now. We thought India was leaning towards the Western camp because they were seen as the chief beneficiary of companies leaving China to avoid tariffs. But then when we put these big tariffs on India, suddenly the benefit of reshoring into India, well, that kind of went away. And now the Indians are cozying up to the Chinese and the Russians. Maybe a little bit too much stick, not enough carrot in the trade war negotiations, just throwing it out there. We got an interesting story out of Rio Tinto buying up American aluminum stockpiles, possibly unintended consequences of the tariffs. We all knew aluminum prices were probably going to go higher, but we've got depleting domestic stockpiles and not much domestic production yet, meaning higher aluminum prices are on the horizon. We've got China is capping coal production in order to support prices. That has a lot to do also with this trade war. Guys, there's a lot happening on the trade front. This whole global world order is shifting, even if the headlines have somewhat fallen from their Liberation Day hysterics. There is a lot of change taking place in the global economy right now, and this China coal story has a lot to do with that. And we also got earnings from Dick's and Best Buy this morning. Both were pretty good, impressive same-store sales growth, and yet both stocks are lower this morning. That is kind of interesting. Guys, we got a lot to talk about. How about we shrink my big melon of a head, and let's see what's going on in the world of finance this morning. Don't forget that like button and that subscribe button for you new guys so you can come back tomorrow and have your coffee with the melon heads, because we do this one every single day. And right now, the S&P is just barely positive. You know what? Considering that data center revenue miss at Nvidia, this is a big win for markets here, up by 6.5 points or 0.1%, when arguably the S&P should be down by 1% or 2% this morning. So stocks are holding up all right. The Dow also in the green, 82 points higher, 0.18% to the upside. And even the NASDAQ is up 19 points, 20 points to the upside, 0.08%. All three indexes in the green this morning, despite that all-important Nvidia disappointment. Meanwhile, the DXY is a little bit weaker this morning, 19 basis points to the downside, 98.00 for the U.S. dollar. We have got the bond market this morning. It's kind of a mixed bag. Not a lot of movement happening here. The 30-year Treasury, 4.905. That's off by almost 1 basis point. The 10-year is at 4.239, unchanged at the moment. The 2 years at 3.643, that's down by 2 basis points. And the 1 month is down by a point and change, 4.304 this morning. And speaking of the bond market, guys, we were talking earlier this week about the blowout in UK borrowing costs. We've been talking about the increase in Japanese borrowing costs. Check this one out, worth keeping an eye on. This is the French 30-year government bond, and that is at 4.4%. These are daily candles going back to the start of the year. You can see French borrowing costs are rising. France is in the midst of a budget crisis right now. They're trying to cut spending. The government is falling apart over that. There may be snap elections or a new prime minister appointed. We just don't know. But look, while everybody is lowering rates around the world, check it out. Interest rates are heading higher. Pay attention, you real estate bros. Pay attention, all you, don't worry, the Fed rate cuts will save the day. Well, the Europeans have been cutting for close to 2 years now, and European borrowing costs are still going up. That's how that works. The Fed does not directly control long-term borrowing costs. So keep an eye on that one, guys. It's getting more expensive to take on debt, even as the world's debt pile continues to get bigger and bigger. Looking over at commodities this morning, we've got gold is in the green here, $3,400 for gold, back above $3,400. Higher by about 0.09%. But check out my favorite of the shiny this morning. Silver quietly approaching $39 once again, $38.94. That's higher by about 35 cents or 0.91% higher. I like the shiny. And look, guys, silver's looking really good here. And there's no enthusiasm for this run in metals prices. I'm just not seeing it. Contrast this with the rampant euphoria that we saw in 2021 with the silver squeeze movement. This is the polar opposite. Guys, I think metals has a lot of room to run here. And again, for the second time, I like the shiny. Copper, meanwhile, is higher by 0.42%. Platinum is down by about 0.25%. Palladium is higher by almost 2% this morning. And crude oil is lower by about 0.25%, $64 even for October WTI futures. Looking over at Bitcoin this morning, it's looking a heck of a lot better than it looked a few days ago. $113,175 is priced on Coinbase. That's higher by about $2,000 from yesterday, well off of the lows of around 108,000 and about 108,600 that we saw on Monday night, Tuesday morning. So Bitcoin catching a little bit of a bounce here. Is it a dead cat or is this a reversal? I think we need some more data points before we go to that. Keep an eye on that 50-day moving average. That is the level that was support that broke. That's around 116. So we're still a ways from that here. I won't be celebrating this move in Bitcoin just yet. All right, let's talk about Nvidia here. Nvidia forecasts decelerating growth after 2-year AI boom. And look, I was knocking Bloomberg pretty hard over the circling of the wagons and that ridiculous thing they did with Gamers Nexus. But let's give Bloomberg credit. They have the most accurate headline this morning. Almost all the other financial outlets, their headline is, give me an N, give me a V, give me a DA. What's that spell? Accounting irregularities. Everybody else is cheerleading for Nvidia. You actually get some honesty in Bloomberg's headline here. The forecast decelerating growth after 2-year AI boom pretty well captures the picture here. Nvidia, the world's most valuable company, gave a tepid revenue forecast for the current period, signaling that growth is decelerating after a staggering 2-year boom in artificial intelligence spending. Sales will be roughly $54 billion in the fiscal third quarter, which runs through October, the company said in a statement Wednesday, though that was in line with the average Wall Street estimate. Some analysts had projected more than $60 billion. In other words, that's a disappointing guide there as well. The outlook adds to concern that the pace of investment in AI systems is unsustainable. That's probably because it is unsustainable. Difficulties in China have also clouded Nvidia's business, though the Trump administration's recently eased curbs on exports of some AI chips to that country. The reprieve hasn't yet translated into a rebound in revenue. Again, this whole China thing, it's bunk, guys. Nobody cares about the H20. That is a distraction. Nvidia still selling a boatload of chips to China. We got a chart in just a minute that will show that. Now, let's go to the important thing here. The data center unit, that's a division that's now larger by itself than any other chip maker, had sales of $41.1 billion. That compares with an average estimate of $41.3, a data center miss. That is the biggest takeaway from Nvidia's earnings. The market is overlooking that this morning. Gaming-related revenue, once Nvidia's main source of income, was $4.29 billion. Analysts had projected $3.8. So the gaming segment, pretty good. Automotive segment, a bit shy of estimates. Nobody really cares about Nvidia's auto segment. The results showed hints that spending by giant data center operators could tighten at the margins if the near-term returns from AI applications remain difficult to quantify, said eMarketer analyst Jacob Bourne in a note. That's hilarious here. All right. What are they saying here? Returns from AI applications remain difficult to quantify. Let me just say this, guys. Returns from AI applications are only difficult to quantify if you're an ancient Egyptian pyramid builder and you have no concept of zero. All right. Then they would be very difficult to quantify. But for everybody else, the returns from AI applications are incredibly easy to quantify. There aren't any. None. Bupkis. Zero. AI does not make money. Only hardware makes money. Why is this so difficult to quantify? It's very easy. It's one syllable. None. That's incredibly easy to quantify. So, shout out to the Egyptian pyramid maker / e-market analyst, Jacob Bourne, for that little piece of wisdom this morning. Anyway, look, the China thing. Check out this chart. Now, look at this chart and see if you can guess when the restrictions on GPU sales to China exploded, or when did we put those restrictions on the H100 sales to China? Yeah, as soon as we restrict the sales to China, look what happens with Singapore revenue. Guys, they're not building data centers like that in Singapore. All right, we all know it. Do we need to revisit this? Do we need to show the videos again that I did on this channel showing the smuggling from Singapore and Malaysia into China? Do we need to revisit the whole thing about what Gamers Nexus did? Do we need to talk about the 2 guys in California that were just arrested for running a GPU smuggling operation, or the 3 guys that were arrested in Singapore earlier this year for the smuggling operation, or the DOJ probe into Nvidia and Supermicro smuggling of servers? Do we need to talk about all that? Oh, we don't? Okay. So forget all this analysis of China and all these headlines about how great the China sales would be if the Trump administration would just get out of the way. Nvidia is breaking the law by selling these chips to China anyway. We all know it's happening. Let's move on. $10.1 billion of sales to Singapore. Gag me. All right, now here's one. Shout out to Jaguar Analytics on X. This is important. And I zeroed in on that data center revenue because that's what you have to do, because data center revenue is what's driving NVIDIA's growth. Check this out from Jaguar this morning. NVIDIA's sequential quarter-over-quarter data center sales growth of the last 4 quarters. Look at this. 17% third quarter 25, 15% after that, then 10%, then 5%, and now they're guiding flat 0. You guys see a trend here? The growth is slowing. All right? The music is slowing in the data center space. It has not stopped. The bubble has not popped, but it sure as heck is slowing down here. And when that number goes negative, which it is bound to do, the laws of physics guarantee it. We just can't power the things. Look out below. But guys, it ain't today. Look at NVIDIA stock. I got to refresh this. It might even be green. All right, it's down 0.5%, $180.69. This stock is holding up remarkably well here, considering that disappointing data center number. It was priced for perfection. We didn't get perfection. Stock's doing all right here. Now, are we going to close the day in the green? I don't know. We'll see if the dip buyers come in. I mean, this market will it is the Ron Burgundy teleprompter market. This market will buy anything you put in front of it. And right now, they're all making up these big numbers about, oh, don't worry, we expect data center CapEx is going to be $6 billion by the end of the quarter, which, by the way, that's something like $800 billion a quarter in CapEx from big tech. No way. It's just never going to happen. Big tech is already talking about scaling it back because they can't power the things. All right, let's shift gears. Well, I think we beat NVIDIA to death this morning. U.S. economy expands at a revised 3.3% rate on stronger investment. Well, data center, it's in this story too. That stronger investment, yep, that's in there. But the other takeaway is the trade war in this. We're not talking about that because it might make Donald Trump look a little better, and Bloomberg can't have that happen. But the U.S. economy expanded in the second quarter at a slightly faster pace than initially estimated on a pickup in business investment and an outsized boost from trade. You notice the big one, the outsized boost from trade, did not make the headline. Why is that? Because politics. Inflation-adjusted GDP, which measures the value of goods and services produced in the U.S., increased at a 3.3% annualized pace. The second estimate from the Bureau of Economic Analysis showed Thursday. That compared with an initially reported 3% increase. It was actually 3.1. Net exports added nearly 5 percentage points to GDP. That's the most on record after weighing on GDP in the first 3 months of the year. You guys may recall GDP went negative in the first 3 months of this year because everybody was rushing to import inventory ahead of the tariffs. Imports is a negative in GDP math. Well, then the tariffs hit and we saw that stop. And so that reversal is creating the illusion anyway of GDP growth. The turnaround in GDP followed a first quarter contraction that was the first since 2022 as companies raced to import goods ahead of tariff hikes. Looking forward, the economy is projected to expand at a modest pace as consumers and businesses adjust to President Trump's trade policy. And we did touch there on consumers. That's still the big question, guys. Right now, the tariffs are making GDP look bigger because the trade deficit is getting smaller. And the trade deficit has been a big drag on GDP for decades in the United States. Now the trade deficit is getting smaller, so GDP is growing more. But the big question, that trade deficit getting smaller, we all know prices are going to go higher at some point. Who's going to bear them? What is the effect going to be on the U.S. consumer, who is responsible for about 3/4 of U.S. GDP? We just don't know yet, guys. To be determined. And we have got another big trade story here this morning. Japan's top trade negotiator cancels trip to the U.S. over trade deal issues. Japan's top trade negotiator, someone I definitely cannot pronounce, canceled a trip to the United States on Thursday over issues related to the U.S.-Japan trade deal. In a statement, Japan's chief cabinet secretary, other man I can't pronounce, said that his trip would have involved the discussion of U.S. tariff measures. However, during the coordination with the U.S., because it became apparent that certain points required further technical discussion, the trip was canceled, and it was decided that discussions will continue at the administrative level. In other words, guys, this deal didn't happen yet. They're still negotiating. It wasn't really a deal. So what's going on? Hayashi said Hayashi said Tokyo will urge the U.S. to amend its presidential order on reciprocal tariffs as soon as possible and ask Washington to issue a presidential order to lower tariffs on automobiles and auto parts. The White House has an executive order setting the baseline tariff rate for Japan at 15%, but there has not been a written confirmation cutting the tariff rate for automobiles to 15% from 25%. Akazawa reportedly said in July that the U.S. had promised to amend the executive order on reciprocal tariffs on Japan to include a no stacking arrangement in which tariffs will not stack on top of each other beyond 15%. That would be similar to the arrangement made with the European Union. So that's what Japan wants. They want us to officially lower our tariffs first. What do we want? The investment package that's on the table. Reuters had earlier reported that also on the agenda for Akazawa's trip was a written confirmation of the details of Japan's $550 billion investment package for the U.S. in exchange for reduced tariffs on imports. That comes after U.S. Commerce Secretary Howard Lutnick said in a Fox News interview Monday stateside that the U.S. will make an announcement regarding the package. The $550 billion package was announced as part of Tokyo's deal with the U.S. in July, which saw so-called reciprocal tariffs on Japanese exports lowered to 15% from 25%, and tariffs on Japan's key automobile sector was cut to 15%. However, sticking points emerged over the $550 billion investment package, with Trump touting the package as our money to invest as we like. And some people are saying Japan is simply handing over $500 billion, Akazawa said after the deal was announced, but such claims are completely off the mark. So we're not getting $550 billion. Why is that? I suspect, and again, I'm theorizing here, but I suspect included in that $550 billion were these ridiculous numbers that Masa-san at SoftBank pledged for Project Stargate. And I remember at the time saying, SoftBank doesn't have $500 billion. Where are they going to get this money from? It doesn't yet exist. This is a fake hype headline. And well, here we are. We took that fake hype headline and we threw it into this trade deal and claimed the Japanese were giving us $500 billion. Now it's time to put pen to paper. Oh, that's right. SoftBank doesn't have the money, and the whole deal falls apart. I don't know for sure that's what's going on, but I suspect that is what's going on because that $500 billion pledge is eerily similar to the numbers SoftBank has pledged for the ridiculously named Project Stargate, because the name Babylon 5 must have already been taken. All right, more trade stories. India's Russian oil imports are set to rise in September in defiance of the U.S. Look, guys, this is the polar opposite of the story that we got yesterday about how India was looking to cut Russian crude imports. So, hey, we ran that story yesterday. We got to go with this one today. Russian oil exports to India are set to rise in September, traders said, as producers cut prices to sell more crude because they cannot process as much in refineries that were damaged by Ukrainian drone strikes on energy infrastructure. The Ukrainians blew up a whole bunch of Russian refineries, and so the Russians can't refine their own crude. Looks like they're going to sell it to the Indians, and my guess is the Indians are going to refine it and sell it right back to the Russians. India has become the biggest buyer of Russian oil supplies that were displaced by Western sanctions after Moscow invaded Ukraine in 2022. This has allowed Indian refiners to benefit from cheaper crude. 3 trading sources involved in oil sales to India said Indian refiners would increase Russian oil purchases in September by 10 to 20% from August levels, or by about 150,000 to 300,000 barrels per day. The sources, who cited preliminary purchase data, could not be named because they were not authorized to speak publicly. The 2 biggest buyers of Russian oil for India, Reliance and Nayara Energy, which is majority Russian-owned, did not immediately respond to a request for comment. Russia has more oil to export next month because planned and unplanned refinery outages have cut its capacity to process crude into fuels. Ukraine attacked 10 Russian refineries in recent days, taking offline as much as 17% of the country's refining capacity. So, guys, looks like the Russians are selling more crude to India. Those increased tariffs on India, now at 50%, are not having the desired effect on target, when yesterday it looked like it was the polar opposite. Another trade story, another one to keep an eye on. Guys, there's a lot shifting underneath our feet here as this tariff story progresses and the market starts to adapt to, at risk of sounding cliche, the new normal of deglobalization. Tariffs turn aluminum maker Rio Tinto into a buyer in the U.S. market. Rio Tinto Group, one of the world's largest aluminum producers, runs a refinery and 5 smelters in Canada's Quebec province, with most of the metal flowing south to the U.S. market. Now, with President Donald Trump's tariffs, it's suddenly cheaper for Rio to buy aluminum in the U.S. and resell it to American customers rather than move its own metal across the border. Trump's 50% tariff on aluminum imports, which took effect in June, forced Rio to curb shipments to the U.S. and instead buy supplies from rivals. As long as those supplies are already in the country, the shift in strategy was described by people familiar with the move who asked not to be identified, discussing sensitive commercial matters. Rio's strategy, however, has limits. The aluminum industry doesn't produce enough metal on its own to satisfy the domestic market. With fewer imports, American aluminum buyers will rely more on the dwindling U.S. stockpiles Rio is already tapping. The company is purchasing aluminum blocks known as ingots on the open market, with trading houses and some banks involved in the transactions, according to the People. The metal that hits the market is produced by Rio's competitors, including Alcoa, Emirates Global Aluminum, and Century Aluminum, the People said. Some comes from warehouses at various U.S. ports. Rio has bought at least 50,000 tons of aluminum from the U.S. spot market since June, according to some of the People. In contrast, the company shipped 723,000 tons of aluminum to the U.S. in the year's first half, most of it passing before the 50% levies took effect. All right, so what's the net result here, guys? You've got a big Canadian aluminum producer can't afford to sell into the American market because of the tariffs. So they're buying aluminum in the U.S. spot market, buying down existing stockpiles, and then selling that to U.S. consumers. But what happens when those stockpiles are exhausted? Well, this is going to lead to higher domestic aluminum prices. It's probably already happening. Now, some of the beneficiaries there, they mentioned Alcoa. Alcoa makes aluminum in the United States, but they don't make enough of it. And so you're going to have an imbalance in markets here. The whole point here is to rebuild America's domestic aluminum smelting capacity, but that's going to take years. The higher prices are going to get here first, and you can already see the early innings of that happening with a Canadian aluminum producer buying down existing U.S. stockpiles. And you've got trade developments in China this morning. China is capping coal production to support prices, top miner and analysts say. Pay attention here, guys. They are scaling back the production capacity in China because of the trade war. It can't be good for the Chinese economy. China has placed curbs on coal production following an unexpected supply increase in the first half of the year that weighed on prices, according to an official of a major mining firm and analysts. China's output in July dipped to the lowest level in over a year. It had risen more than 5% year over year in the first half, sending prices in some parts of the country down nearly 30% year over year by the end of June. Analysts said the country ramped up inspections in July to ensure plants kept to approved production capacity. Now, MySteel cited China's anti-involution campaign and inspections across multiple provinces. Involution describes supposedly unsustainable competition among Chinese firms. Anti-involution has become a slogan for reducing industrial overcapacity. When prices fall below cost level, mines cut back on investments and upgrades, leading to safety concerns. Now, look, guys, what we're talking about here, this is China's coal industry is cutting back production. This isn't because of energy. This is because of steel. We're talking about coking coal, which isn't used to make electricity. It's used to refine steel. And of course, the big steel and aluminum tariffs, we also saw the effect on aluminum from the prior story. China is cutting its coal production to try to support coal prices because nobody is buying as much Chinese steel anymore. And now you've got this big campaign, this anti-involution campaign, that's all about, look at those underlying words, reducing industrial overcapacity. This is the same thing we're seeing in China's electric vehicle market. They're producing too much at a loss. It's not sustainable. and the Chinese government is trying to get them to produce less. Guys, this is the trade war. If the U.S. is no longer going to be buying this stuff produced in China, then China either needs to sell it elsewhere or they need to produce less. And sell it elsewhere, I'm sorry, but banana republics in Africa are not going to make up for the loss of the U.S. market. Not even close. China's got to produce less. What does that mean for Chinese employment? What does that mean for the Chinese economy in the long term? A lot of things are shifting beneath our feet here, guys. You see it in coal. You see it in aluminum. You see it in Russian oil. You see it in Japan's autos. You see it everywhere. U.S. GDP. The trade war is making a mess of everything. All right, two more quick ones. We're going to blow right through these. By the way, Lisa Cook is suing President Trump over her firing. We knew that was happening. That headline must have just broken while we were talking here. More on that. She's probably going to be charged by the DOJ any day now. But we got Dick's Sporting Goods raises guidance after second quarter earnings beat. We got some pretty good numbers from Dick's Sporting Goods. I'm going to zero in on the really good one here. Same store sales. During the quarter, comparable sales grew 5%, well ahead of expectations of 3.2%. And in retail, same store sales or comparable sales, that's the most important number. Dick's put up a good one here, but Dick's stock not doing so hot here. It was down yesterday. Okay, there it is, up 1.6%. It was down ahead of the opening bell. Didn't make a lot of sense to me. Those were pretty good comps from Dick's. So possibly a sign of some consumer resilience here. At least at some retailers, people are still spending. Same deal over at Best Buy. They beat their sales estimates on demand for gaming and computers. Now, all those computers that people bought in 2020 and 2021, they're now a couple of years old, and the replacement cycle seems to be starting again. Again, we're going to zero in on the same store sales number. Where are they here? Comparable sales rose 1.6%. That is after several consecutive quarters of same store sales decline for Best Buy. So pretty good numbers from Best Buy here. Let's see what that stock is doing. Down. Let's refresh this, make sure we get an accurate mark here. Down 2.3% on a return to same store sales growth. So the market not quite celebrating these Best Buy numbers, but Dick's Sporting Goods is up a little bit on the same. And I just want to say thank you very much to the Pasta Man. Hey, what's going on, Nashville? He says, NVD, does your dog bite? Nope. Grr, chomp. I don't get the does your dog bite reference. Is that talking about Jim Cramer's dog named Nvidia? I don't know. Look, guys, the Nvidia story, you got so much cheerleading, and there is so much embedded enthusiasm and a willingness to overlook outright treason with the sales to China, and the willingness to overlook the most grotesque example of accounting irregularities I've seen ever or since the dot-com bubble. Right now, the market continues to overlook that. These earnings from Nvidia were not good enough, but they weren't bad enough to pop the bubble. That's the takeaway there. Sorry, man, I'm not picking up on the reference, but that's like 2 or 3 in a row that I didn't get right away. Thank you, as always, Pasta Man, for supporting the channel. I appreciate the super chat, sir. Steve Canyon, what's going on, Steve? He says, Jack, you bought your A game today. Well, thank you so much, Steve. I appreciate that. I try to bring my A game every morning, but nobody brings their A game every day, right? Well, today's an A day. Thank you, Steve. Appreciate the good vibes early in the AM and the support of the channel, sir. Uncle Fedster says, happy Friday, Jack. M2 mumblings. You can plot percent change in money supply on the Fed charts. The rate 1 year ago was 1.6%, and currently it's at 4.8%. Look at all that money supply growth. That looks like inflation to me, Fedster. Hankey's golden growth rate for 2% inflation is 6%. You need 6% money supply growth to achieve 2% inflation? Where's all that money going? Up in smoke in data centers, I guess? I don't know. I mean, we do have we do have this data center build out, and the fact that, we're spending something like $2 trillion we have spent in data centers for $20 billion of revenue and $0 of profit from hyperscalers. I mean, this is the most grotesque capital destruction the world has ever seen. I mean, maybe World War II, we destroyed more capital than we're destroying right now with data centers, but that's probably close if you factor in inflation. Yeah, guys, the money supply growth, we should not be easing with the money supply at an all-time high. All right, that's That's just sugar high economics. It's got to stop. It's the reason why Main Street can't afford to live. It's the reason why the wealth gap keeps exploding. We all pretend to care about it, and then we're all like, now just cut into all-time high asset prices. Is what it is. Thank you, Uncle Fedster. I got to look into Hanka's golden growth rate. That's the first I've ever seen of that. I'm not sure the math behind that 6% money supply in order to achieve 2% inflation. Interesting. Thank you, Steve. What else we got? Uncle Fedster's back again. Says, happy Thursday, Jack. LOL. Did I say it was the wrong day? Did I say it was Wednesday? I do that sometimes. Now, happy Thursday to you, Uncle Fedster. Thank you for the good vibes. I appreciate it, brother. And thank you, everybody, for having your coffee with the Melon Heads this morning. I appreciate that very much. Thank you guys for the super chats and you magnanimous Melon Heads on Patreon and YouTube. Thank you guys for supporting the channel. Links down below in the description, all that good stuff, should you feel so inclined. But I must insist on that like button and that subscribe button for you new guys on the way out. Do all that good stuff for the algorithm. Hi, Mom. Hi, Dad. Love you guys, everybody. Till next time, live small and dream big.